Let's start off with the stocks that we're focusing on, and the big one today is Tata Motors. Looking at the way the stocks actually surged ahead today. Mayuresh, your comment here on Tata Motors and if it's still looking attractive at these levels?
So clearly, Priyank, I think from a valuation perspective, after the sharp fall that we've seen, it's almost halved in terms of its peak levels. Clearly, a lot has probably got gestated in terms of how the Chinese volumes might degrow for Tata Motors. And if one really assumes, at least on the EBITDA front for JLR, the margins narrowing down to that 14 to 16% range, and even if one really assumes margins coming at 14% with Chinese volumes even going further down, I think largely the correction that we'd seen on Tata Motors at around 280, 285 was probably in the price. Now, the numbers that have come through have been encouraging. Ex-China, I think the numbers have held up. And again, I think the management commentary on new launches put abet the kind of volumes expectations that one really builds, both in terms of the Chinese markets and then the world markets overall. So our take is that the JLR volumes should start reflecting better numbers with new launches on XE, XF, the Discovery Sport probably starting to reflect better numbers for Tata Motors. And on the domestic front as well, though a minuscule part in terms of the overall pie, I think that's seen some encouraging signs as far as the MHCV volumes are concerned. So, yes, I think value is looking extremely attractive. So any declines onto this stock, long-term investors can have a look at that. So 15, 18-month view, Tata Motors can give good returns from the levels that we're at. All right.
So on a longer-term horizon, still potential as far as Tata Motors is concerned. But Kunal, on the technicals here, what's the near-term, what's the immediate outlook looking like?
If you look at the charts for Tata Motors, of course, it's been the biggest market underperformer. But if you look at the charts from a very short-term perspective, the fact that they're trading above 310, which to my mind was the immediate resistance on the charts, I think is a bit encouraging. If it continues to trade above 310, manages a close above that level today, then you could see a reaction to about 340 levels. But I'm still not convinced that the overall trend for Tata Motors has reversed. If you look at the slightly medium-term or long-term trend, it continues to be bearish. So I think from a short-term trading perspective, definitely can go up. But from a longer-term perspective, one must continue to wait and watch.
All right, let's get the RSI going for you as well. It's rebounded pretty much from that 30-odd level where the indication is that the stock's oversold. Currently, it's at 45 odd or so. You can see that spike coming in post today's move. That's as far as Tata Motors is concerned. Now, talking about a couple of the cues that the markets have been watching out for, German Chancellor Angela Merkel arrived in India last night for a 3-day visit. She'll hold wide-ranging talks with Prime Minister Narendra Modi. The two countries seek to scale up bilateral relations significantly in a whole wide spectrum of key sectors. Anvesha Ganguly is joining us with the key agenda for the discussion. Anvesha.
Well, only 6 months after PM Narendra Modi had visited Germany for the Hanover Fair, Angela Merkel is now back in India for a 3-day visit concerning intergovernmental consultations between India and Germany. A number of issues as far as trade and investments are concerned are on the table. Mainly, the focus will be, of course, on defense manufacturing. Apart from that, Angela Merkel is likely to be raising issues as far as ease of doing business is concerned, from tax stability to increased market access for German products will be on the agenda. Apart from that, IPR issues is also something that will be brought up as well. The Chancellor is there with 6 cabinet ministers, including the defense minister as well as the Minister for Economic and Foreign Affairs as well. So there will be a number of pacts that will be expecting from the visit, including those on renewable energy, skilling, as well as manufacturing. From the Indian side, of course, we are expecting that there will be a fast-track mechanism that will be put in place for German investments into India. We'll now be waiting to watch what will be these economic pacts that will be put in place. Apart from that, the main agenda there will also be the EU in India bilateral trade and investment agreement, talks on which have been stalled since the GVK ban on 700 drugs. Now we'll be waiting to see if talks can go forward in that front as well.
All right, so that's as far as some of the developments are concerned that we'll be watching out on the political front. Anvesha, thanks for getting us those updates. Let's get it going with our stock list as well. HDFC is the other stock that we're watching out for today. Mayuresh, your reading when it comes to HDFC, the stock's been trading higher today. Couple of triggers, last week's fundraising in terms of the NCD and the warrant issue. Plus this morning, you've got SBI just taking a very marginal cut in terms of home loan rates. So your thoughts on HDFC?
So clearly, Priyank, I think HDFC has always traded at premium valuations if one talks of valuations at the beginning of the conversation. However, I think if you look at the kind of spreads that HDFC has been enjoying, I think at 2.3%, the spreads might continue. You might see some compression happening with the back going down. So clearly, I think on the base rate cut, you might see some NIM compression happening onto the bank. But again, the cost of borrowings will go down. And HDFC predominantly borrows from the market. So I think the valuations at around 5 times price to book, the expectations of a strong delta that one probably expects on earnings getting reflecting in better spreads would probably continue for the stock. So I think though it trades in valuations and we have currently a neutral rating on that, long-term investors holding stock at lower levels should continue holding on to this.
All right, so that's as far as HDFC is concerned. Kunal, on the technicals here for HDFC, how are you reading it?
Well, I think the stock has managed to close above 1200 last couple of trading sessions, and it's trading at 1240 right now. I think it is good for another 50 rupees if you look at the chart structure, although it's a slow mover HDFC, but definitely merits a hold. One should continue to be long on HDFC, put a stop loss at 1200. I think one should buy at 1290, 1300 on this one.
Let's get the RSI going for HDFC as well and get a quick check on that. RSI pretty much in the center, 57 odd level is what we're seeing currently for HDFC. Adani Ports has been in the news flow as well. We've been tracking developments with L&T there. Mayuresh, any thoughts on Adani Ports and L&T?
So as a disclaimer, I think we do not cover Adani Ports, so difficult to give a call on that one. But on L&T, the order book is extremely strong, Priyank. The kind of rebound that you saw in the hydrocarbons business in the quarter gone by, I think it's a very positive trend for L&T. Their maintenance of the 15% guidance on both revenue and the sales front, again, is a very encouraging sign, because I think if the CAPEX cycle resumes earlier than one really expects, I think L&T's rebound will be much faster in terms of the entire CAPEX recovery theme. Having said that, if you're looking really from a 12 to 15 month perspective, the FOTP valuation also suggests the other businesses expected to do well. So on the non-core asset front, when you're talking about divestments happening on from the parent company, L&T Infotech has performed exceedingly well. If you apply a parent company holding on L&T Finance, the real estate arm, I think there is huge amount of potential as far as the consolidated numbers go. So yes, I think we remain extremely bullish on L&T. Our target still stands close to that 2000 mark.
All right, so that's as far as the outlook for L&T is concerned. Day high for that stock is what we're seeing so far. Kunal, both Adani Ports and L&T, if you've been tracking the technicals there?
For L&T, I think the stock remains a bit of a market underperformer. If you look at its chart structure, the stock is forming lower peaks on its daily charts as well as on shorter-term charts. So I think one should be cautious about investing into L&T. I think the stock could go down more. What we see now is a rise, and I think this is an opportunity to actually short sell L&T. From a short-term trading perspective, I think the stock could go to 1450 and possibly even lower. So I'm not really bullish on L&T. As for Adani Ports, I think the stock is in a longer-term range and it's trading towards the lower end of the range. So it can be bought from a trading perspective. I think around these levels, close to about 300, the stock has got a robust support. So I think it can be bought into at the current levels.
All right, so that's as far as Adani Ports is concerned, as well as L&T on the technicals. Pull up RSI for Adani Ports for you. 45 is where the RSI currently is on this counter as well. All right, now the other interesting space that's been buzzing today has been some of these power financing companies as well. REC and PFC, both have been showing some bit of strength today. Remember, there's been some bit of commentary from the government in the last couple of days to try and clear the entire SAB mess, to try and again somewhat look at an option of probably restructure some of these loans as well. Both these names have been showing good strength today. Mayuresh, what do you make of REC and PFC?
So clearly, yes, I think the entire expectation of the markets has been what probably happens with the financial health of a lot of these power discoms. And the government moves in this will be keenly watched out for. So any positive development on this one will definitely have a telling effect as far as the earnings trajectory for REC and PFC go. As far as core numbers are concerned, the asset quality did see some amount of slippage for both the companies. The kind of provisioning that one really needs to be done at 3.5% of the restructured loan part for both these companies. Also, I think hit into the higher provisioning for them. Again, clearly, I think the margins have been sustained by both REC and PFC, close to that 5.10% mark. The earnings trajectory For PFC, 20% for the last few years, REC 25% for the last few years have been strong. So I think any development that probably happens in terms of the financial health of SEBs is a positive sign. They've got outstanding sanctions, 1.5 trillion rupees for PFC, if I'm not mistaken, around 1 trillion odd rupees for REC. So that also will provide a huge impetus. The private sector lending is close to 16.5%, 17.5% respectively for both these guys. And though you've seen some slippages happening on the private side, I think there is ample growth if one really expects reforms to come through. So I think the key trigger for these stocks will be reform measures, how they are implemented over the next few quarters. But again, I think from an earnings perspective and from a cash flow perspective, at least the next 2 quarters will be a little bit of a soft issue for both these companies. Valuation is extremely attractive at this point in time compared on a price-to-book methodology. And if you look at the long-term trading averages, it definitely looks attractive. But again, I think one really needs to wait and watch on how results will pan out and what moves the government does before we take it.
All right, so that's as far as REC and PFC are concerned. But Kunal, on the short-term angle out here, what are technicals telling you when we talk about these counters? Would you buy into this kind of a rally?
Well, if you compare the two, I think PFC has got a much better looking chart. It's got a picture-perfect bullish flag forming on its daily charts, and it's broken out. So I think definitely merits a buy. One should initiate a long position today in PFC with a stop loss on 230 and a first target of 250. So I think out of the two, PFC definitely looks much more promising. REC, I think, has already had a good run, and at the current levels, I think one should take some profits off the table. Both the charts, I think, look positive otherwise.
All right, so that's as far as PFC and REC are concerned in terms of technicals there. Let's get the RSI going for both these names and get you a quick mention there. RSI for REC is at around 65. Well, for PFC, you're talking about the RSI hovering around the 55 mark is what we're tracking so far. Claris Life Sciences is another mid-cap stock that's been buzzing in terms of trade today. Let's pull that stock up for you. It's up almost, it's up quite significantly, in fact, for Claris Life Sciences today. Just get that stock going for you as well in terms of how the intraday move is panning out on the counter. It's been holding steady since the morning itself is what we've been tracking. Mayuresh, any thoughts on Claris? Stock's up nearly 5% today.
Unfortunately, Priyank, we do not have coverage, so very difficult to comment on this one.
Okay. Kunal, on the technicals here for Claris?
Well, if you look at Claris Life Sciences in particular and the entire pharma space overall, I think definitely most of these companies have broken out, have been outperforming the index, and I see this outperformance to continue. So I think definitely Claris can also be bought into at the current levels, and the stock could go up further still from the levels that it's trading at.
All right, let's get the RSI going for you as well in terms of how Claris is shaping up on the technicals there. 71 is what we're seeing the overbought level for the stock, or rather the RSI is around 70 is what we're seeing currently. The RSI has moved beyond that level of 70 at 71 is what we're seeing. IDFC is the other stock that we've been watching out for, gentlemen. Mayuresh, let's start off with you for IDFC. Last week itself, you saw the stock actually go X. Today it's up almost 2.9%. What's the outlook for IDFC now?
So clearly, Priyank, one really needs to understand how the valuations have panned out for IDFC as a holding company.
Okay.
Really, I think if one really looks at the existing market cap and you apply a 20-25% discount that a lot of market analysts were applying, the fair value was anywhere between 75-80 rupees, but the market is probably assuming a higher market discount coming through for the holding company, primarily because one really is not sure on how the banking operations will foray, and even on the core arm on how the asset quality will pan out. So I think the infrastructure lending book, which has been a strong 4-point for IDFC, I think that will have a huge amount of bearing as far as the loan book is concerned, specifically on the wholesale side for the banking part. We're also talking about a very soft accretion happening on the deposit front, as well as building up of the CASA book. And clearly, I think that will take a toll in terms of how return ratios will pan out. So I think the markets are probably looking at a 45-50% kind of a discount in terms of the parent company. So clearly, I think the 60-65 band that you're talking about, and if you look at the banking part, which is the residual part of the business, I think you're talking another 40-50 rupees here. So I think if you apply a 1.5 to a 2 times valuation on price to book, you get a valuation of anywhere between 45 to 60 rupees for the bank. So clearly you're talking of a combined entity value of around 120, 125 rupees at the current market price. But again, I think one really needs to understand how the numbers will pan out. The SLR, CRR requirements are going to take a toll, as I mentioned, both on the NIMs and the return ratios, at least from a couple of years' time horizon. So I think you need to really give a long time as a long-term investor to see how the return ratios pan out. Because as a corollary, we've seen what Yes Bank has taken in terms of building up its book, and it takes at least 2 to 3 years in our opinion. So clearly a very long-term view is required to be taken by investors who are already invested in IDFC.
All right, so that's as far as IDFC is concerned and what we're tracking in regard to that stock, 3% higher. Any technicals here, Kunal, in terms of how one should be looking at IDFC?
Well, I think if you look at the charts for IDFC, one thing that you notice is that there are too many retail positions built into the stock. And I think that itself is a reason why you should try and avoid buying into IDFC if you're a short-term trader. I don't really expect a big rally to happen here anytime soon. I think IDFC will continue to underperform the market given that it's got a large retail holding. So I think it's going to be a long haul. If you're an investor in IDFC who has a very long-term view, it's a different story. But from a short-term perspective, I think it is well avoided.
All right, so that's as far as IDFC is concerned as what we're tracking so far on the counter itself in terms of the way Qs are shaping up. All right, let's discuss. The RSI might get a little tweak because of the adjustment there, but ICICI Bank is another counter that we're focusing on in terms of trade today. Mayuresh, any thoughts on ICICI Bank?
So, Priyank, I think we remain very bullish and optimistic on the private space, and ICICI Bank included in that. The results have been quite reasonable in the past quarter. And again, if you look at the management commentary, they're extremely hopeful in terms of stability, in terms of asset quality panning out. The share of retail loans has increased, primarily driven by mortgages. The deposit growth has been quite stable. And again, I think the asset quality has remained quite stable for the bank. What probably works in the favor again is the price to book multiples, and if one really expects.
All right. What about technicals, Kunal, for ICICI Bank?
Well, I think chart structure plus the kind of breakout that we see on Bank Nifty, I think augurs really well for most banking stocks, especially for private banks which have broken out of bed. ICICI Bank too, I think, has got a long way to go, and if the rally is to continue, I think ICICI could lead from the front. So definitely merits a buy at the current levels.
All right, still looking positive as far as ICICI Bank is concerned. Get the RSI going. It's around 49 odd level is what we've been tracking on ICICI Bank today. One stock now that's been in attention today, or rather has been getting all the wrong bit of news flow, has been Maruti. There have been some brokerage downgrades coming in. Mayuresh on Maruti today. Massive target price cuts. Once again, the Gujarat plant coming into spotlight as well. We caught up with the management a couple of hours back to get some perspective from them. How are you reading all the news development, on Maruti, and also what are you recommending clients to do after the 50% gain that the stock's seen in the last 1 year?
So clearly, I think when you're talking about what is probably happening with Gujarat plant and whatever we've been hearing on the media, clearly Maruti has been a sharp outperformer. That's point number one. Point number two, I think in terms of valuations, I think we're looking at an earnings perspective from an FY17 expectation. I think 225 EPS was probably in the price at the higher end of the band, which is touched at 4750, 4760 kind of a level. So clearly, I think valuations looking a little bit stretched at that level. Again, competition coming through. Again, I think we're not expecting huge amount of EPS cuts happening. So clearly, the EPS trend would stay. It has gained market share. I think the product mix will be extremely crucial for Maruti at this point of time. So it's a hold, but again, clearly, fresh investors should wait for declines onto the stock. We have a higher target price from the current level and accumulate rating. But again, I think wait for declines onto the stock before one really starts chipping in from a fresh investment perspective.
All right, technicals and Kunal for Maruti?
Well, I think Maruti is a classic buy on dips kind of stock. It's got a very, very powerful, very robust trajectory that still remains positive. And if you look at long-term charts, they're very, very positive. So there's no reason to really worry about Maruti. Every dip should be bought into. And I think that over a period of time, Maruti might be a big outperformer as it has been in the last 1 year and before that. So I think I'm very bullish, and one should definitely look to buy into dips.
Okay, buy on dips is a technical strategy as well when it comes to Maruti here. But let's get a view in from R.C. Bhargava, chairman of Maruti Suzuki, on the developments regarding the Gujarat plant. We caught up with him a while earlier. Hear him out.
The arrangement is so much in favor of the shareholders of Maruti that it would be difficult to find reasons why this arrangement should not go through. The work on the erection of the first manufacturing line in Gujarat is in full swing. Scheduled date of commissioning, which was originally fixed, was around May 2017. The effort is always to try and do it before the target date. The funding of the project will be done entirely by Suzuki. Total benefits of the production in Gujarat, total, not partly or mostly, will actually flow to Maruti because the Gujarat plant is to run on a total no profit, no loss basis.
All right, that's the management earlier in conversation with us. Pull up the one-year chart for Maruti and get a quick mention there in terms of how this one's panning out. 53, 54% up is what we're tracking as far as this stock is concerned. You know, since we're talking about the auto pack, Kunal, before we wind down the conversation, I want to get a quick comment from you on another mid-cap auto major that's been in focus today. I'm just reading some brokerage notes coming in on Force Motors as well. Any technical strategy? Because the stock's spurting quite a bit today when we talk about Force Motor. It's been in focus for the last couple of days as well. Any technical trend there?
Well, I think the trend is still intact, and if you look at the chart, I think the stock continues to outperform. So definitely, if you're an investor or a slightly medium-term positional trader, you could definitely look to buy into the stock at the current levels. I see more upside for Force Motors.
Mayuresh, is this something that you've been tracking?
So.
All right. Then Mayuresh, a quick comment on TCS, because that's the other gainer that we're watching out for today, 2.5% higher on that stock. How are you reading TCS?
So clearly, I think we remain optimistic on Tier 1 IT names.
Okay.
TCS included. Again, the digital foray, the digital data contribution to our top line has been good. Their respective business lines, including BFSI, lifestyle, life sciences, have been performing well. The client mining activities have been very, very strong. So I think the cross-currency growth, both in US and rupee terms, should be reasonable. The volume growth should be reasonable for the TCS over the next 2 to 3 quarters. And all issues related to visa costs, wage hikes on the EBIT front, I think should start getting normalized over the next 2 to 3 quarters. So clearly, overall top line has been good. We continue to like, and even if it trades at the premium valuations compared to its peers, I think the premium valuations will sustain for TCS.
All right, gentlemen, we leave it there. Thanks so much for taking the time out today to talk to us and sharing your perspective on some of the stocks that have been in focus today. On that note, it's a wrap on this edition of Market Movers. Coming up next, Mid-Cap Strategies with Sharmila Joshi of sharmilajoshi.com on the world of mid-caps.